Good day, welcome to Vinco FS, where we teach you how to trade forex profitably and better. So, in today's training, we're going to teach you how to analyze the forex market using Fibonacci retracement. So, when do you use Fibonacci retracement? You use Fibonacci retracement to trade the forex market when the market couldn't complete its previous low or previous high. So, you find where the a nice entry point from market retracement using Fibonacci retracement. So now let's go to 1 hour on good. Then I'll first of all teach you how to use the Fibonacci retracement in a bullish market. I'll make use of the previous market movement to analyze this. So let me start from this particular point here. So we can see that in this point, we had our lowest point in the market at this place. The markets moved previously from this point here to this lowest point. So since the market couldn't continue its downward movement, we're now looking for an up. Previously, the market was moving up, then it reversed. It couldn't continue that upward movement. It retraced downwards with this fair value gap bearish candle. So we want to now know where to enter buy again. So click on this. We click on the Fibonacci retracement here. Then we'll draw from this lowest point to the current point where it started that downward movement. That means where it had a resistance from moving up, then started coming downwards. Point where the downward movement stopped, because we know that the market is in a bullish trend, but it had a retracement. So we now want to know where to enter the market again to make the best from the market. So you drop from that lowest point of the market to the current highest point where it started that retracement. Then look for the golden zone. What is the golden zone? The golden zone, you can look at the calibrated points in the Fibonacci retracement. You will see 0.50, 0.0, and 0.618. So that is where you should place your buy, then set your stop loss below that your entry point, at least pips below that your entry point, or you place your stop loss directly below this last candle here. Then set your take profits as you wish or as you desire, either 1:2, 1:3, 1:4 risk to reward ratio. So you can see that the market from this particular point at 618 moved up till even at this particular zone. So you can target anywhere and take your profits. So let's analyze the market using Fibonacci retracement in a bearish trend, as we have done now in a bullish market. So we'll click on the Fibonacci retracement. You will now, this time around, you will draw from up, is the from up to the current lowest. So we had the current lowest here. So this is our trend. This is our okay. We assume that this was the current lowest because it was the current lowest. So how do we identify this? So we can see that this market was started its bearish movement from this point that we drew it to this point that it stopped at this point that we that the last Fibonacci bar stopped. Then it had a retracement. It made upward movement a bit to 0.50. Then it started moving back. So what we are trying to spot is where to place either your sell or buy when the market has retraced, had made retracement. Retracement means that the market will still continue in that direction after little or major pullback, then it will continue in that direction. So you are using the fibonacci retracement to spot that particular point, that entry point where you place your sell or buy order. So in a bullish market like we did earlier, you would draw your fibonacci from down to up. That means from the lowest point, the current lowest point, to the previous current highest point where the market was. Then look for 0.618 or 0.50.0. The 2 point is known as the golden zone. That is where you place your sell or buy order. That is where you place your buy in in the case of bullish market. And in this current case that I've drawn here, which is the case of bearish market, you draw from up the current, you draw from the highest point up to the current lowest point, where the market stopped its downward movement before retracing. That's then you now spot the 0.618 or 0.50.0. So in the previous one, the market started in the bullish one, it started its bullish market from 618, whereas in this particular scenario, the market started its downward movement at 50.0. So you're expected to, or slightly above 50.0. So you're expected to place your sell at that particular point. Shows that the market has continued its downward trend or its bearish movement. So do well to watch my other videos on how to trade forex better and profitably. Thanks and remain blessed. If you have any question, please comment and I will make the video or answer your question correctly.